I just wonder how much of a haircut these companies can take. But I know that their orders overseas for new materials, new goods, new clothes, new everything, their orders are down 50%.
Are you tired of trying to keep ahead in the rat race, only to have so much of your hard-earned money going to the tax collector? Equity doesn't pay the bills. Retirement savings don't pay you now, and there are only 24 hours in a day to work. The only solution is passive income that pays you 24/7 now, not 40 years from now. From vetted investment opportunities to tax saving strategies. Let John guide you through all the confusion and take control of your financial life in pursuit of financial freedom. So sit back, relax, and welcome to the Wealth and Freedom Nexus.
You know, for the most passive returns in real estate investing, I like to put my money with Freedom Family Investments, a team I personally trust because they pay me steady streams of cash flow, hassle-free, all while doing the things I love. Returns are better and more reliable than the stock market, up to 12%. I love that tax benefits offset capital gains or your W-2 income. For a little insider pro tip, knowing who to trust is key to success in investing. Freedom Family Investments has a perfect track record of paying their investors right on time. To learn more, text family to 66866. If you want to invest on autopilot with people I personally trust and with a team who cares about you reaching your financial goals, go ahead and text family to 66866.
Check out the website simplepassivecashflow.com for podcasts, videos, articles, and free e-courses. If you guys have any specific questions, feel free to reach out to the team via email and we'll get you pointed in the right direction, whether it be an educational course or information about syndication deals. If you haven't read my book, The Journey to Simple Passive Cashflow, click the link below to get a free copy. Thanks to John and the Wealth and Freedom Nexus podcast. Our team is here to help you take the first step, or if you're a seasoned investor, then we're here to expand your reach into alternative investing.
Hey there, welcome back to another great episode of the Wealth and Freedom Nexus podcast. As always, I'm your host, John Rickgarn, investor, educator, and realtor. Now, today's guest, we actually had I lost count how many scheduling conflicts we had. This individual, Jeff Davis, who I'll get into his bio here in a minute, was another connection I made through the great Yona Weiss, who has been on this podcast twice. For those that are just coming up on this podcast, feel free to go into your favorite podcast app or on YouTube. Just search for Yona Weiss. He was the first episode of 2023 and the first episode of 2022 for this, where we talked about cost segregation, tax benefits, and so forth. But like I said, Jeff was another one that I networked with one of Yona's LinkedIn challenges. We started talking about it, and Jeff's actually got a kind of an interesting story. He was impacted, well, in quite a negative way, we shall say, with the Hurricane Katrina that hit New Orleans. So he had to pack up, moved to Houston, started searching for a job, really didn't have any job prospects at the time. And like he says, at the end of the day, he's basically a sales rep, and I can definitely empathize with him. I spent 12 years in corporate sales. I know how, that is. And, since then, he has not only grown his income through that job, working for a Fortune 200 company, started to learn the ropes of global logistics. He used that money to start building real estate. Started with, like a lot of us do, a single family, maybe duplexes and fourplexes. And while he's gotten out of those, has shifted more to multifamily, has actually scaled over to 1,200 units that he has in his portfolio. He basically put it best that he started investing his commissions in 2015, so his commissions could earn commissions, and that's how he just kind of built and grew and compounded and got to where he is now as a successful W-2 employee, but yet also has quite a bit of his net worth tied up in multifamily. And this got to be an interesting discussion because Jeff is actually known as the supply chain investor. He's been on numerous podcasts as well. You can go to Bridgestone Capital, that's his website, and see other podcasts that he's appeared on. But he knows a little bit more in the ins and outs of what makes the global supply chain run. Now, if you're listening to this right as it drops here in August of 2023, COVID is probably still pretty fresh in your memory of all the supply chain disruptions we had. Just last year, I still remember when we started our kitchen remodeling project, which, oh, God, it's still going on. That's a whole nother topic. We ordered windows. Let's see, I think it was the first week of September. And then with that, took about 12 weeks, I think, to get in. And then, of course, it was in the middle of winter, and we did not get those windows installed till early mid-March. So I think all of us can share stories of just how impactful global supply chains are. And I think, this was kind of an interesting guest to bring on because I really wanted to do more of a deep dive into, what processes are in place for the global supply chain. Now, COVID wasn't the only shall we say, driver of the supply chain crisis. It was just kind of a rapid exacerbator, if you want to call it that. There was a lot of other things in play, which we'll talk about this, from the unions at Long Beach Port, for instance, the regulations in California that impacted the trucking industry, the just-in-time and Michael Dell model when it comes to how to order, how to procure stuff, which, in my opinion, just in time looks great on paper, looks good in theory, but even with the best intentions, just a small hiccup can derail this completely. And a large hiccup like COVID we had back in 2020 can derail this massively. Just as a kind of a reminder, I know a lot of you know this, I spent 12 years in office equipment sales. I still remember the tsunami that hit Japan in 2011, and that impacted our business greatly. We had a huge backlog of orders from mainly sold Canon devices at that time. And I still remember there was one device they put on order, or I should say my customer put on order in May, and we finally got that in September. And usually in the copier industry, we were used to just a quick turnaround time, maybe 2-3 weeks, not 4 or 5 months. And, as history repeats itself, later on with the chip shortage that I'm sure everyone's heard about and experienced with COVID, that impacted that, where trucks, copiers, printers, microwaves, ovens, you name it, they might have already been built, but they were waiting on those little computer chips in them because just about everything nowadays requires a computer chip. So with that, I just kind of wanted to share some real life examples of how the global supply chain can be impacted. But I thought this was kind of interesting because with the global supply chain infrastructure, and if there are complications or problems that could spell out opportunity, how to invest and how to benefit from those global supply chains. Again, I'm not an investment advisor, but just, myself, I invest in a lot of the Midwest area. I actually have rental property in Memphis, Tennessee, which is a large, distribution hub. We talked about Memphis. I think that was back in episode 33, if I remember correctly, with Mid-South home buyers. But even just logistics, I've invested in companies, UPS and FedEx. My personal take, I think UPS is far superior than FedEx as a stock holding, reliable dividend, but that's another discussion. But anyways, like I said, Jeff and I kind of talked about what all drives the global supply chain, what he's learned about it from the industry, and how he took that and related that into real estate investing and, solving problems for customers, and then went into solving problems for real estate investors as well. So with that, we will get into today's interview with Jeff Davis, the supply chain investor, after a word from one of our longtime sponsors. For investors seeking DSCR financing, check out timothyhero.com. The guy has closed over 150 DSCR loans in the last 2 years and has been appearing on podcasts and written about by journalists. He's well connected with some of the best lenders in the game and can get you the financing for your rental properties. Hey, Jeff, thanks for coming on the show. I appreciate it.
Yes, sir. Thank you. Thank you very much for having me. I know
Yeah,
it's
you
been
bet.
a trial.
Well, like you said, family and kids and reschedules, it's like life happens, but here we are finally able to get together. So
Yeah.
but now for my viewers and listeners, Jeff, for those that maybe aren't familiar with you or maybe, connected with you on LinkedIn like I am, can you kind of give us a quick overview on, yourself, what you do, and maybe how you got into supply chain management and logistics?
Yeah. So I was born and raised in New Orleans.
Okay.
And then I got married in June of '05, and Hurricane Katrina hit in August of '05. And so
there's a wedding present for you.
it was like, hey, congrats. And so we packed up just everything we owned into the trunk of my Camry.
Wow.
So it wasn't like we had a whole bunch, but moved over to Houston. And I just started going door to door to find a job with all the skills that I had accumulated up until my 25 years of age, which was zero.
Okay.
And there was a logistics company who said, we will hire you.
Okay.
And I was just a data entry clerk at that point, doing data entry every single day. Really just dove in, learned the business, started working very well with customers and figuring out different solutions. And here I am almost 20 years later, figuring out solutions for customers. I'm in a customer facing role in business development. So I'm a global logistics sales executive, which is a very fancy title, but
all right.
I'm a sales guy.
Gotcha. Yep. I think, well, like someone always said, everyone's in sales, the toddler that screams, I want ice cream. I want ice cream. They're selling to their parents that they want ice cream.
Right.
So, now maybe a high level, Jeff, and I know, with COVID, we're 3+ years since the COVID pandemic, and, it seemed like every other news story was like, oh, the supply chains are broken. The supply chains are broken. But maybe very simplistically, what exactly is supply chain management?
Yeah. So supply chain is the companies working through and buying from their various vendors, and then their vendors. So all the way down to the root of the raw materials.
Okay.
Through the processes of getting finished goods and transporting them all the way to the end user.
Gotcha. Okay. So like
that's a
Apple
very raw definition, but that's what it is.
No, it makes sense. But yeah, like you said, Apple needs more iPhones to be made. So, okay, they need more batteries. They check with their battery supplier. And I know they do a lot of stuff internally. And okay, battery supplier, we have our copper mine, our lithium mine, our nickel mine, our everything.
You went all the way down, correct, right? And so what about the mines? Well, how are they getting the equipment? So if you go all the way down the supply chain, the equipment is coming from right here from John Deere and Caterpillar.
Gotcha.
And it's being exported out to the mine. So supply chain is really complex. And so, I took a leap there. The mines aren't related to Apple other than they're buying those raw materials. Right. It has to do with labor. And, there's many, many countries involved, especially when you deal with a multinational such as Apple.
Sure. Okay. Sounds good. Now, looking back and, maybe you can kind of relay, from, your experience, what you've seen, what you maybe firsthand experienced. Did COVID, really break the supply chain, the global supply chain, or were there issues already in place, or what was, if you will, kind of like a behind the scenes story with it? Did COVID really break it? And if so, why was that?
Yeah, I don't know that it broke it. It just added a lot of pressure to an already sensitive supply chain. I mean, here we are, I guess it's 3 years later, right?
Yeah.
We're quite a ways away. It's still we're a delicate supply chain. And so what COVID did was not add any capacity, right? We did not get more labor. We did not get more warehousing. We did not get more ships or planes, but we did get more demand because everybody still had the ability to shop for consumer items on their phones and from their houses.
Okay. And if
the demand spiked, but the capacity remained the same.
Okay. So, and when you're getting paid, a couple $1,000s of stimulus checks to stay at home. It's like, well, gee, well, I can't go to work again today. I guess that's another 8 hours. Hey, let's go on Amazon and see what I can find.
Right. I guess I will buy. I guess
Yeah.
I will buy.
Yeah.
So your supply chains that were linked, that already were tied to e-commerce
Okay.
distribution channels, they were the most successful.
Okay. Makes sense. Now, I'm kind of thinking back to myself, my previous career, I spent 12 years selling office equipment. And there was a number of times where I still remember the tsunami that hit Japan. Then we had a huge backlog of copiers, and it was kind of like, yep, you'll see it when you see it. On the flip side, I still remember this was probably, I want to say 2009, where one of their suppliers or divisions, they overbuilt. Keeping it simple, there was one segment of machines, they overbuilt the finishers for them. It could only go on those machines. It couldn't go on smaller machines or largers. So they were doing promos left and right to try to get rid of it. So I guess my question is, once that, I saw firsthand that changed, and then they kind of went to the JIT or just-in-time ordering. Did that, I want to say, philosophy or structure, did that kind of exacerbate all the problems we were seeing, and then COVID just kind of spiraled it out of control? Huntsville, Alabama, the Rocket City, the Star of Alabama, the most populous city in Alabama, ranked as the best place to live by U.S. News and World Report. It's also a great place to invest in, and best of all, it is the place for this year's Spartan Summit by Spartan Invest. Join me and many other investors as we tour the Huntsville market with the Spartan team. Learn what sets their property management and turnkey services apart from others, and why they have been consistently ranked on Inc. 5000's fastest growing companies. Go to SpartanInvest.com today and reserve your tickets. Best of all, use promo code WFreedomNexus for 15% off your tickets. Join me October 4th through the 6th in Huntsville, Alabama, and unlock your legacy with Spartan Invest. Or
I love that question.
Is there a reason behind just-in-time ordering? So
that is a fantastic question, and it's a raging debate right now. And because everybody loved that just-in-time, so they do these regional distribution centers to be closer to the consumer for the e-commerce.
Yeah,
and they keep their inventory levels low, therefore their stable costs low. And as soon as it hits the US, basically it's in the consumer's hands, right? They've already got their goods paid for without having to pay for them.
Gotcha.
Just based on a financing, the Michael Dell model.
Okay.
That really bit them, because when this supply demand went inverse and there was more demand than supply, that JIT model fell apart.
Okay.
So then they began gobbling up all this warehouse space, which, you and I are in commercial, really, we saw everybody's very excited about industrial warehousing. Well, yeah, every big retailer began gobbling up warehouse space for a number of reasons, one of which is to store inventory, the other of which was to get cargo moved from the ports to avoid additional costs at the ports.
Okay.
And now it's just sitting, because they paid a premium at the highest cost of labor, highest cost of raw material goods, and the highest cost of transportation, and the highest cost of warehousing storage. Inventory levels at this point are at the highest, both in the US and in Europe.
Okay, interesting.
I'm going to put an asterisk there about warehousing.
Okay.
Please make a note. Inventory levels are very high, much higher than companies want them to be, Bed Bath & Beyond.
Yep. Yeah. You might be getting some good deals right now if you can still get to a Bed Bath & Beyond at the time of this recording. So
yeah, and I'm waiting for that, right? And we got a good deal on a couch just recently, and it was significantly less than some friends of ours. Same couch.
Yeah,
and it was about $1,500 less.
Wow.
I just wonder how much of a haircut these companies can take. But I know that their orders overseas for new materials, new goods, new clothes, new everything, their orders are down 50%.
Wow.
So the ships aren't full.
Okay, interesting. Now you had mentioned the ships, recently, and I think we saw a lot in the news where, they had miles and miles of cargo ships backed up. LA port was a big one, but I know there's others throughout the US. The story I heard was that it was kind of shall we say, a bad mix of policies and union regulations where, well, just hire more people. Well, no, we can't do that because we have these union workers. We have to protect their jobs. Okay, we'll pay them overtime. No, we can't do that. There's, locked in at 40 hours of contract. So we have the same number of people working the same number of hours, but to unload 10 times as many goods because they're backlogged. Can you speak to that at all? Or is there a little bit more complexity behind it as far as when it gets?
There's a little bit more. I would add to that complexity to the mismanagement of the Long Beach and the New York ports, specifically in Long Beach, the trucking regulations that they have, which is tied to the environmental regulations. About 5 years ago, longer, maybe 2016 or 2018.
Okay.
California came out with this rule about trucking, and basically it had to do with the Lyft and the Uber. What do you call those drivers?
Oh, well, independent contractors or
it had to do with the independent contractor driver, right? And so a couple of things. Number one, if you were an independent contractor, you had to make a certain amount, and then you couldn't drive a vehicle older than 5 years, which forced a lot of truck drivers who are predominantly owner operators,
right,
to get a new vehicle. Well, that's not how they make money, is by buying $100,000 vehicles every 5 years. They keep them for like 25.
Wow.
So they all left the state naturally. Or they had to go work for a large scale trucking company that would own the trucks and was able to finance it by leveraging that. So California lost a huge portion of their inland intermodal trucking capacity. So when this actually hit, they just did not have the capacity to handle it.
Wow.
Just 2 weeks ago, they passed a similar bill that by 2024, every truck that enters the port system has to be electric. So stay tuned.
Yeah, that could be interesting. And then we're going down the rabbit hole. It's like, well, gee, if the blackouts are having now, I certainly hope they can charge all these electric vehicles once they're on the road.
It's something, I'll tell you that.
So
when I saw that, it makes you a little sad. And I have a friend who owns a trucking company over there, and it's amazing, right? Stuff he sees.
Yeah, I'm sure. So now, Jeff, maybe high level, like you said, we are 3+ years outside the COVID pandemic. We started to see, inventories are built up, orders are down, supply chains easing, but maybe not back to normal. Will we ever get a quote back to normal, or is this the new normal that we are going to be seeing for the foreseeable future?
Yeah, no, we are past normal.
Okay.
So the lowest rate levels that I had ever seen were 2014, 2015. We're not there yet, but we are beyond where we were before COVID in terms of pricing and speed to get an order booked. And that's just because the demand is not there.
Okay.
So if consumers aren't buying, then the factories aren't making it. It's just that simple, right? The inverse of that is energy production. As oil price goes high, my energy customers are shipping. Those are exports.
Okay.
However, that is not, there's no congestion there either. Congestion at the ports is open. Trucking is open. Your ocean, your air, everything is open for business. So we're back to normal. The only thing that is not is the warehousing, which seems to be, at a tight spot, which is curious. And I don't foresee that lasting past a year from now.
Okay. Sounds good. Now,
warehousing.
Sure.
Be mindful.
All right. Sounds good. Which maybe that kind of leads into my next question. Maybe you can expand on. So I'm a big believer of, wherever there's, I don't want to say crisis, but when, there isn't good news, there isn't bad news, there's just news. And depending on if there's any bottlenecks or stresses or maybe anything out of whack, there's potentially opportunity that a entrepreneur, a capitalist, an investor can, take on and hopefully make some money. So with that being said, with everything, the whole supply chain system, the ecosystem, the logistics, everything, are there any avenues that investors can take advantage of to potentially profit on the situation that we're in?
Yeah, I mean, that's what I do, right? I use my job as supply chain to invest where I see the opportunities coming in 5 to 10 years.
Okay.
So, because supply chain logistics is a leading indicator to the U.S. economy.
Mm-hmm.
And so when we saw those prices inflating to 10x normal costs, right? 12x normal costs, I literally sold all my real estate.
Okay.
And I got out about 4 or 6 months before the absolute height.
Gotcha.
So
yeah.
I'm going to call that a win.
Yeah. Yep.
and now that things are normalized, the only thing that's pending is this inflation thing, which inflation seems to have, they've at least capped it.
Yeah.
They're going to continue with the interest rates. They're trying to fight labor, right? The unemployment.
Yeah.
The low unemployment, which that'll come. But like I said, with inventories as high as they are, and people just not buying, this will come, right? Lower costs of raw materials and shipping are the norm now.
Okay.
And so if we're looking at a 6 to 12 month timeline, then, Lord willing, we're looking at normalcy on the other side of this. This was definitely an abnormal cycle. What I do see is companies that are nearshoring into Mexico, and they're taking their factories out of China, and moving them to Mexico. So I see a huge boom along the southern border.
Okay.
In the next 5 to 10 years.
Okay. Interesting. So, now taking a little shift, Jeff, from the supply chain, what you invest in, outside, you mentioned you've gotten into more multifamily. Like you said, you sold a lot of your real estate right before the peak. How did you, get into multifamily? What was the story behind that shift?
The story was I kept doing single families and I was working a lot.
Okay.
So I've got 5 kids. I have a full-time job, and I had these houses, and I was at one point I was getting home at like 1:00 in the morning from a flip, and I don't even do it myself, but I had to bring materials to the contractors, and I'm just exhausted, right? And after I sold that property, I called a buddy of mine who's an investor. He works for one of the majors, oils, and he's a hard money lender to me. And I told him, I was like, what are y'all doing different? Because he's in a group that was buying up. They had done 4 deals already.
Wow.
Commercial. And so that's how I kind of got on that path, where he was like, yeah, I love that you're borrowing money from me at 11%, but it's not sustainable. It's like, that's how I got on. He introduced me. We joined a mastermind together, and the rest is history. So now I'm almost up to 2,600 units.
Wow. Congrats. Okay. Sounds good. And then you're syndicating all these, I'm assuming, with other investors or partners?
I have a few, mostly syndications.
Okay.
And then I do have 1 JV, and then we have 2 apartments that we're sending offers out today. That'll be a JV. Okay. Smaller, they're smaller. They cash flow. They don't need any work. So, and they're kind of close. One's close to me and one's close to my partner in Dallas.
Okay. So
between the 2 of them be 32 units. But like I said, not syndication, but JV.
Gotcha. Makes sense. All right. Now, as a final note here, Jeff, and again, I want to thank you for taking the time out of your schedule to educate my listeners and sharing your story. Where can my listeners, find out about what you're doing? If there's any new, deals in the pipeline, or maybe invest alongside you with a syndication or kind of a partnership opportunity? Yeah,
we are multifamilyadvice.com, multifamilyadvice.com. Just sign up there. You get a free ebook that we wrote. I'm working on a new one that's all about alternative investments, because we're looking at some that even as a W-2 employee, you can depreciate your taxes, which is very attractive. And so I expect to have something on that by August.
Okay.
And start investing and having some information. But go to Multifamily Advice, get the ebook, schedule a call. I'll tell you what's going on.
All right. Sounds good.
Yeah.
All right. And as always, for those listening, I'll have these links in clickable format in the show notes, so you don't have to hit rewind and grab a pen and paper, and hopefully hoping you write it down correctly. So with that, Jeff, I want to thank you for your time, for sharing your story, and best of luck to you at the rest of 2023.
Yeah. Awesome. Thanks so much for having me, John.
You bet.
Thank you for listening. Be sure to share, rate, review, and subscribe on your favorite podcast platform. For more updates, check out www.wealthandfreedomnexus.com. Remember, nothing on this show should be considered tax, legal, investment, or professional advice. This show is produced solely for educational and informational purposes. Please consult an appropriate and licensed tax, legal, real estate, or business professional for specific advice for your situation. For distribution or publication rights or media interviews, please contact the host.